Imagine waking up one morning and realizing you can't fully trust the place where your paycheck, savings, and financial future are stored. Over the past few years, millions of Americans have watched banks collapse, hidden fees rise, and financial institutions make record profits, while ordinary people struggle with inflation, debt, and uncertainty. And now, more Americans are asking a serious question. Are banks really protecting your money or protecting themselves first? In today's video, we're uncovering why trust in America's banking system is quietly collapsing, what's causing this growing financial anxiety, and why it matters for the future of the U.S. economy. Welcome back to The Dollar Pilot. Today we're talking about something that used to feel unthinkable in America: people losing trust in banks. For decades, banks were seen as one of the safest parts of the American economy. People deposited paychecks, opened savings accounts, applied for mortgages, and trusted banks to protect their financial future. But recently, something changed. Across the United States, millions of Americans are becoming increasingly skeptical of the banking system. And this distrust is not coming from only one political group or income level. It's happening among young adults, middle-class families, investors, small business owners, and even wealthy Americans. The question is, why? One major reason is the memory of financial crises. Many Americans still remember the 2008 financial collapse, when major banks took enormous risks tied to the housing market. Millions of ordinary people lost homes, jobs, retirement savings, and financial stability. Yet many large financial institutions survived with government support. For a lot of Americans, that moment permanently damaged trust in the banking system. People began feeling that banks operated under different rules than ordinary citizens. And then came recent banking instability. In 2023, Americans watched several regional banks suddenly collapse, creating fear about how stable the financial system really is. News headlines about bank runs, liquidity problems, and emergency government interventions reminded people that even modern banks can face serious trouble under economic pressure. Even though most deposits remained protected, the psychological damage was significant. People started asking, if banks are so safe, why do collapses keep happening? Another major reason Americans are losing trust is inflation. Over the past few years, inflation has dramatically reduced purchasing power across the country. Groceries, rent, insurance, healthcare, gas, and everyday essentials became far more expensive. At the same time, many Americans noticed that traditional savings accounts were paying extremely low interest rates, while banks continued earning billions in profits. For many households, it felt unfair. People saw banks increasing credit card interest rates, mortgage costs, and loan payments much faster than they increased savings rates for customers. This created the feeling that banks benefit heavily when consumers struggle financially. High interest rates also made things worse. The Federal Reserve aggressively raised interest rates to fight inflation, which increased borrowing costs across America. Now, millions of Americans are paying historically high interest rates on credit cards, car loans, and personal loans. Some credit card APRs now exceed 25%. That means many people feel trapped financially while banks continue collecting enormous interest payments. This growing debt pressure is making Americans more frustrated with the financial system overall. Another issue is hidden fees. Many Americans are tired of overdraft fees, ATM fees, account maintenance fees, wire transfer charges, late fees, and unexpected banking penalties. Even small banking mistakes can sometimes trigger expensive charges. Critics argue that many banks rely heavily on fee-based income from customers who are already financially stressed. This creates resentment, especially among lower-income households living paycheck to paycheck. Technology is also changing trust in banks. Younger Americans are increasingly using online banking apps, digital payment platforms, cryptocurrency services, and financial technology companies instead of traditional banks. Apps like mobile payment services and investing platforms make younger generations feel less dependent on old banking institutions. At the same time, social media spreads financial fear much faster than before. When rumors about bank problems appear online, panic can spread across the internet within hours. This creates a new kind of financial instability that didn't exist decades ago. There's also a growing belief that the banking system primarily benefits wealthy individuals and large corporations. Wealthier Americans often receive better loan terms, stronger investment opportunities, private banking services, and financial advantages unavailable to average consumers. Meanwhile, ordinary Americans often face stricter lending standards, higher debt burdens, and rising financial stress. This has increased feelings of economic inequality. And perhaps one of the biggest reasons trust is falling is simple uncertainty. The modern economy feels unstable to many Americans. People worry about layoffs, automation, artificial intelligence replacing jobs, rising housing costs, student debt, healthcare expenses, and retirement insecurity. When people feel uncertain about the future, they also become less trusting of financial institutions connected to that future. Now here's the important part. Does this mean the American banking system is collapsing? Not necessarily. The United States still has one of the largest and most powerful financial systems in the world. Most banks remain financially stable, and deposit protections still exist for many customers. But trust is emotional, and once trust begins weakening, rebuilding it becomes extremely difficult. Banks depend heavily on confidence. If people stop believing the system is fair, stable, or working in their favor, frustration grows quickly. This is why financial literacy matters more than ever. More Americans are now focusing on emergency savings, reducing high-interest debt, diversifying investments, monitoring banking risks, and understanding how the financial system actually works. Because in today's economy, blindly trusting any institution without understanding it can be risky. At the Dollar Pilot, we believe understanding money is one of the most powerful skills Americans can develop right now. Because the economy is changing fast, technology is changing banking, interest rates are changing borrowing, inflation is changing spending habits, and financial pressure is changing how Americans view the entire system. The truth is, many Americans are not losing trust in banks simply because of conspiracy theories or fear. They're losing trust because they feel financially squeezed, economically uncertain, and increasingly disconnected from a system that often appears designed to protect large institutions before ordinary people. And unless Americans begin feeling more financial stability, transparency, and fairness, this distrust toward banks may continue growing for years to come. Stay informed, stay disciplined, and remember, protecting your financial future starts with understanding the system controlling your money.